Look, imagine you're at dinner with friends, the bill comes and everyone's throwing in their cards for split checks. You order a $15 salad and water. Your friend ordered the $42 steak, 3 cocktails, and an appetizer. The server says, you all want to just split it evenly, right? And here's what happens. You smile, you nod, and you just paid $38 for your $15 salad. That right there, that's what I call the social tax on financial discipline. And here's the thing, it's costing you way more than you think. My name is Elon Musk, and I spend way too much time thinking about why financially disciplined people end up broke. If you're someone who's actually trying to save money, build wealth, and make smart financial decisions, but you keep finding your bank account empty at the end of the month, and you can't figure out where it all went, make sure to hit that subscribe button and give this video a thumbs up if this helps you out. Here's what most people don't realize. The biggest threat to your financial future isn't your spending habits. It's not even inflation or taxes or any of that stuff. It's the people around you who aren't on the same financial journey and the invisible pressure they put on you to fund their lifestyle. Let me break this down with some math that's probably going to make you uncomfortable. According to a 2023 study by the American Psychological Association, the average American spends $478 per month on social activities they don't actually want to participate in. That's $5,736 per year. But here's where it gets really interesting. That's just the direct cost. Let's say you're 25 years old. If instead of spending that $478 a month on social obligations, you invested it in a basic S&P 500 index fund averaging a conservative 8% annual return, by the time you're 65, you'd have $1.67 million. $1.67 million from just saying no to things you didn't want to do anyway. Let me say that again because I don't think people grasp this. Your inability to disappoint people at brunch is costing you retirement. Now you might be thinking, come on Elon, $478 a month, that seems high. Let me walk you through a typical month for someone earning $55,000 a year. That's roughly the median household income in America. Week 1, your birthday dinner. You budget $30 for yourself, but with the group wine bottles you didn't drink and the birthday person's free meal, your share is $65. Social tax, $35. Week 2, bachelor party weekend. You weren't even that close to this guy, but you went to high school together, so you can't say no. Flight, hotel, activities, meals, drinks. You budgeted $400, spent $750. Social tax, $350. Week 3, your friend wants to try that new expensive restaurant you've been avoiding. You were going to meal prep this week, but you don't want to seem cheap. Bill comes to $80. Social tax, $80, because you wouldn't have gone out at all. Week 4, bridesmaid dress shopping and the mandatory spa day. Another $200 you didn't plan for. Social tax, $200. And we haven't even talked about the coffee runs, the spontaneous happy hours, the group gifts for people you barely know, the destination weddings, or the investment opportunities your brother-in-law keeps pitching. Added up, that's $665 in social tax in just 1 month, and that's being conservative. Here's the thing that makes this so insidious. You're not being robbed, you're volunteering to be poor. And the weapon being used against you is something psychologists call social proof, combined with loss aversion. A fascinating study from university in 2022 found that people experience more anxiety from the possibility of social rejection than they do from actual financial loss. Read that again. You're more scared of your friends thinking you're cheap than you are of being broke. This is where the real damage happens, because financial discipline requires you to do things that feel socially awkward. Suggesting the cheaper restaurant. Ordering water instead of cocktails, proposing a hiking trip instead of Vegas, saying I can't afford that right now, leaving when your friends want to bar hop, not participating in the group gift, skipping the destination wedding. And every single one of those decisions triggers a little social anxiety alarm in your brain that says, they're going to think you're poor, they're going to think you're not fun, they're going to stop inviting you. But look, here's what most people don't realize about the social tax. It compounds in the worst possible way. Let me tell you about my friend Sarah, real person, changed the name. Sarah makes $68,000 a year. She's smart, disciplined, reads personal finance books. She maxes out her 401k match. She's got a budget spreadsheet that would make an accountant weep with joy. But Sarah has a friend group, and this friend group likes to live like they make $150,000 when they all make around $60,700. Weekend trips to Napa, bottomless mimosa brunches, designer handbag investments, SoulCycle memberships, the works. Sarah doesn't even like most of this stuff, but here's what happened. The first time she said no to a girls' trip, 3 of her friends stopped texting her. Just like that, the group chat went quiet whenever she joined. So Sarah caved, and for 5 years she's been funding a lifestyle she doesn't want with friends who, let's be honest, were never really her friends. I ran the numbers with her last year. Between 2019 and 2024, Sarah spent $127,000 on social activities. $127,000. You know what she has in her savings account? $8,000. This is where it gets really interesting, because the social tax has layers like an onion that makes you cry when you peel it back. Layer 1 is the direct spending, the dinners, the trips, the events. Layer 2 is the lifestyle inflation it triggers, because you can't keep going to nice restaurants and then come home to your studio apartment with furniture. So you upgrade your apartment. You need new clothes that fit the vibe of your social circle. You need a nicer car because you're embarrassed to pick people up in your 2008 Civic. According to research from the Journal of Consumer Psychology, people who frequently socialize in high-spending environments increase their baseline spending by 23% across all categories, not just social ones. Layer 3, and this is the killer, is the opportunity cost. Not just the investment returns you're missing, but the career moves you can't make. You can't take that lower-paying job that would teach you valuable skills because you need to maintain your income to maintain your social life. You can't move to a cheaper city with better opportunities because your friends are here. You can't start a business because you don't have savings, and you don't have savings because, well, you see the cycle. Let me show you something that's going to shift your entire perspective. Take two people, both 27 years old, both earning $60,000 per year. Person A, let's call him Social Steve, spends $600 a month on social activities. He saves 5% of his income in his 401k, about $3,000 per year. Person B, let's call her Disciplined, spends $150 a month on carefully chosen social activities with people she genuinely enjoys. She saves 20% of her income, about $12,000 per year. Fast forward to age 65. Social Steve, assuming he gets average raises and his spending scales proportionally, retires with approximately $430,000 in his 401k. Disciplined retires with $1.8 million. But here's what really matters. At age 35, just 8 years in, has enough saved to take a 6-month sabbatical if she loses her job. She has enough for a down payment on a house. She has screw you money that gives her options. Steve has $24,000 and a lot of photos on Instagram with people he doesn't actually like. Now, here's where people get defensive. But Elon, you can't put a price on experiences. You can't put a price on friendship. You're right, you can't put a price on genuine friendship and meaningful experiences. But you can put a price on mediocre experiences with mediocre people who disappear the moment you set a boundary. And that price is your financial freedom. I talk to people about this all the time, and there's always a moment. I call it the financial awakening, where they realize what's actually happening. For me, it was in my early 30s. I was at a bachelor party in Miami, fourth one that year. I was sitting by the pool at some overpriced hotel doing the math in my head. This weekend was going to cost me $1,800, and I realized I don't even like half these guys. I'm here because I felt obligated. I went home, looked at my bank account, and had a mild panic attack. I was making 6 figures and had less than $10,000 saved. Where was it all going? Then I pulled up my credit card statements and highlighted every charge that was social pressure rather than genuine desire. It was 40% of my spending. 40%. That's when I made the decision that changed my financial life. I started paying the social tax in a different currency. Instead of money, I paid it in temporary discomfort. Here's what most people don't realize. You're going to experience discomfort either way. Either you experience the short-term discomfort of saying no, setting boundaries, and potentially losing some surface-level friendships, or you experience the long-term discomfort of being 45 years old, still living paycheck to paycheck, watching your friends who made different choices buy houses and take real vacations while you're still splitting $200 bar tabs and wondering where your life went. The difference is one type of discomfort lasts for a few awkward seconds. The other lasts for decades. Look, I'm not saying become a hermit. I'm not saying never go out or never spend money on experiences. I'm saying audit your social spending with the same scrutiny you'd audit a business expense report. For every social invitation, ask yourself, do I actually want to go to this, or do I just feel obligated? Are these people I genuinely care about, or am I just avoiding awkwardness? Will I remember this experience in 5 years, or is it just filling time? Is this aligned with my financial goals, or am I derailing my future for someone else's present? Now you might be thinking, okay, Elon, I get it, but how do I actually do this without losing all my friends? Here's the system that works. Step 1, calculate your current social tax. Go through your last 3 months of spending. Highlight every expense that was primarily driven by social pressure rather than genuine desire. Add it up, multiply by 4, that's your annual social tax. I'm willing to bet it's way higher than you think. Step 2, set your social budget. Decide in advance how much you're willing to spend on social activities per month. Make it realistic, but make it deliberate. Maybe it's $200, maybe it's $500, but it's a ceiling, not a floor. Step 3, create your hell yes filter. From now on, you only say yes to social invitations that are a hell yes, not a maybe, not a well, I should probably go, a genuine I'm excited about this. Everything else gets a polite decline. Step 4, develop your no scripts. This is crucial. You need go-to phrases that let you decline without over-explaining. I appreciate the invite, but I can't make it work right now. That sounds fun, but it's not in my budget this month. I'm focusing on some financial goals, so I'm being selective about where I spend. Notice no apologies, no elaborate excuses, just a simple, honest boundary. Step 5, suggest alternatives. When you decline the expensive option, propose something you can do. I can't do the expensive restaurant, but I'd love to grab coffee and catch up. The trip isn't in my budget, but I'm free for a hike this weekend if you want to hang out. This is key. You're not rejecting the person, you're rejecting the price tag. Step 6, find your financial tribe. Here's the thing, when you start setting financial boundaries, you're going to lose some people. That's not a bug, it's a feature. Those people were keeping you broke. But you're also going to find your people, the ones who respect your goals, the ones who suggest the potluck instead of the restaurant, the ones who are also trying to build wealth and will support your journey. Those are your people. Invest in those relationships. Look, I'm going to say something that's going to make some of you mad. If your friends can't respect your financial boundaries, they're not your friends. They're just people you spend money around. Real friends don't disappear when you say you can't afford something. Real friends don't pressure you to spend beyond your means. Real friends don't make you feel guilty for prioritizing your future. And if setting financial boundaries causes people to fall away from your life, you haven't lost friends. You've lost financial anchors. A 2024 study from the University of Michigan found that people who maintain friendships with individuals in similar financial situations report 34% higher life satisfaction and accumulate 48% more wealth over a 10-year period compared to those who maintain friendships across significant financial divides. That's not saying you can't be friends with people who make different money than you. That's saying you can't maintain friendships with people whose spending habits require you to spend money you don't have. Here's what nobody tells you about financial discipline. The first year is hell. Your social life might take a hit. You might spend some Saturday nights at home when you used to be out. You might watch Instagram stories of events you declined and feel a pang of FOMO. But year two is when it clicks. By year 2, you've saved enough that you have options. You can handle an emergency without panic. You can take a vacation you actually want to take, not one you felt obligated to take. You can make career moves that align with your values instead of just your bills. By year 5, you're operating on a different level entirely. While your former friend group is still splitting bar tabs and complaining about money, you're looking at investment properties. You're considering starting a business. You're thinking about retiring early. And here's the beautiful irony. The people who judged you for setting boundaries at 27 will be asking you for financial advice at 37. The ones who called you cheap for skipping their destination wedding will be asking how you saved for your house down payment. The ones who said you only live once when pressuring you to spend will be stressed about money, while you're living proof that financial discipline creates more life, not less. Let me leave you with this calculation. The social tax isn't just what you spend, it's what that money could have become. That $478 per month we talked about at the beginning, over 40 years at 8% annual return, that's $1.67 million. But it's more than that. It's the compound interest of freedom. It's the ability to say no to the job you hate. It's the ability to say yes to the opportunity that excites you but doesn't pay well at first. It's the ability to weather a recession without panic. It's the ability to retire when you want, not when your body gives out. Every time you say yes to social pressure, you're saying no to future freedom. Every time you split the check evenly when you ordered less, you're funding someone else's lifestyle instead of your own future. Every time you go to an event you don't want to attend to avoid disappointing someone who wouldn't help you with your rent, you're choosing temporary approval over permanent security. So here's what I want you to do right now. Open your banking app, look at your last 30 days of spending. Highlight everything that was primarily social pressure. Add it up. If that number makes you uncomfortable, good. That discomfort is information. Use it. Then I want you to think about one social obligation you have coming up that you don't actually want to do. Something you're only saying yes to because you feel like you should. And I want you to decline it. Right now, send the text, make the call. Hey, I've got to pass on this one, but I appreciate the invite. That's it, see what happens. I'm willing to bet the apocalypse you're imagining doesn't actually occur. And if someone does react badly, congratulations. You just identified someone who values your wallet more than that's valuable information. Here's the thing, financial discipline isn't about deprivation. It's about intention. It's about spending your money on things that actually matter to you, not things that matter to other people. The social tax on financial discipline is real, it's expensive, and it's completely optional. You just have to be willing to pay a different price. The temporary discomfort of disappointing people who probably aren't thinking about you as much as you think they are. 10 years from now, you're going to be somewhere. You're either going to be financially secure with a smaller circle of genuine friends and the freedom to live life on your terms, or you're going to be financially stressed with a large circle of acquaintances who will disappear the moment you can't keep up, wondering where all your money went and why you have nothing to show for it. The choice isn't about being social versus being rich. It's about being intentional versus being passive. It's about designing your life versus defaulting into someone else's. So hit that subscribe button if this resonated with you. Drop a comment telling me about a time you paid the social tax and regretted it. And if you're ready to stop letting other people's expectations dictate your financial future, go watch my video on building wealth on a middle-class income. I'll link it in the description. Your future self is watching this decision. Make them proud.